What's good, YouTube? Here we are back with another video about the forex majors breakdown, and let's see where we are in this midweek review. So the last time we did a breakdown was in the beginning of the week on Monday on the 4th. So let's see what price has done so far. So as usual, let's start with Euro USD. Like we said on Monday, price was around here. As you can see, we were expecting prices to continue bullish because our bias was bullish from the monthly, and here we are. Prices have created new highs, have broken swing highs, and are well on their way up north as usual. So nothing unexpected. In fact, everything that we have expected to happen did happen. Price did come back down, tapped the zone one more time, and then took off. So that's good. Entry would have been here, but we missed it because it was this setup happened right before the holiday, New Year's. So we did not want to enter for unnecessary risk mitigation. So price is heading forward northwards as anticipated, and beautiful price action. Right now we would say price is probably around 100 plus pips in profit. Yep, around 120 pips in profit. So that would have been a very nice trade, and had we entered, our stop loss would have been around 30 pips. So that's literally 1 to 4, around a 1 to 4 RR profit right now, which is very nice. So yeah, that's that about Euro USD. Even though we have broken new swing highs, there is no need to draw a zone because the genesis of the move that created the swing high was a zone itself. This zone. So it just came back into the zone, refilled more of the orders that did not get filled, and maybe some more new positions were added, and that led to the now break of this swing that was created. So we'll just continue to monitor price and see what happens. Now moving on to our next pair, which is the GBP USD. Now GBP USD, we had a zone here, but the zone had been obliterated and neutralized, so price started to come down, and then we identified the zone that led to the break of these two swings. But we weren't too keen on this zone because the move was not so impulsive. Sure, it did break the swings, which is a great sign, but the move itself was not too impulsive. It was pretty sluggish, which could be due to the fact that this happened during the time where there was low liquidity in the market, as well as holiday season, not many traders at their desks, etc. So many factors. So we still drew the zone out regardless, so that we can know where we are and be able to monitor. Price came down, but didn't quite tap it again. Now, as you can see something of a pattern here with GBP USD. We had a zone here that we marked out, and then we spread it into the future. This zone was very impulsive, and it broke swings, so this was important to us. But the price came back down, but it failed to actually touch the zone, and then continued on its way up. Now here we see a similar pattern happening again. It comes right above the zone, fails to tap it, and then starts to move. So we'll just keep monitoring this pair and see what happens. Sometimes market makers like to do this to trick people into thinking that it's about to reverse, but then they come back and actually touch the pattern. So if price does come back down, especially with some gusto and viciousness and impulsiveness, to quickly take out people, because people might start placing for people who entered buys, might place their stop loss orders right here. So those would that would be basically liquidity. So the market makers, BFIs, they're just engineering liquidity, more liquidity. So they trick people into thinking they're gonna leave, but then they come back down quickly, take everyone out, use those orders up, place the opposite order. So because they're sell orders, because they're stop loss orders for a buy order, they would be selling, right? So they need somebody to sell. They need sellers in order to buy. So they take these sell orders, place opposing orders, which are buy orders, tap into the zone, and then take off. So it's just a trick that the market makers like to do a lot of the time. Now the fact that they have not come back here, down here, and touched this zone, and this zone was our initial zone that we had faith in, we shouldn't be surprised if price actually goes through here and comes all the way here before reversing. So that's why we have our zones out. So we'll just keep monitoring price and see what happens. But yeah, that's basically what I'm thinking about in GBP. GBP might experience a drop. It could be any day now. It could be a week from now. Who knows? But if it does come down here or here and give us our setup, one of our signals, we would be happy to enter and continue long. So let's go to the next pair, which is USD JPY. Now, as we can see, based on where we were last week, we were around here, and price has come down and broken below this zone. So this zone has been neutralized. The fact that a 4-hour candle closed below means any potential buy orders that would have pushed price higher now failed. The fact that price was able to close below means every buy order here had been neutralized. So what we can do is we can effectively just delete that zone and then remove it from our charts. So we are bearish on the monthly. As we can see, we have all these zones up here that have not been retested yet. And now we have broken new swing lows. Here we have broken a swing low. So if we were to draw a zone here to identify the zone that broke this swing low, it would have to be this candle right here. This candle, because this is the candle at the extreme edge, you know, the highest candle that led to the momentum that broke this swing low. So if we were to draw our zone, this would be it right here. Draw it to the extreme edge, to the body of the candle, and that's it. Basically, that's our zone. So as you can see, if we extend all these zones just to make it look nice and uniform, we have a new zone here. This candle here led to the breakdown of this swing, and then price came, just retapped the zone, and then came back down and then broke this swing again. So because this swing was broken from within the zone, we do not need to draw another zone. So this is the only zone we have right now. So that's another area of interest for us. If price does come back to it, we would be willing to take a short if we get a signal. So we have so many zones up here, you know, and none of these zones have been tapping. This shows that yes, we are bearish, but the price action isn't as pretty. If we go back to the monthly, as I know you remember in our previous breakdowns, we can say that yes, the trend is bearish, but there has been a lot of consolidation. So I call this bearish consolidation. So the price action hasn't been pretty, and as such you can see the evidence on the lower time frame charts. As you can see, zones have been created, but zones have not been tested again. So price action isn't the prettiest, you know, but we will have to analyze what we have, and yeah, this is what it is right now. Price could come back, return here, give us a signal, or it could go all the way up. It has a right to go all the way to any of these zones, tap them, and then continue. There might be a kind of deep retracement that we might experience, or it might be a shallow retracement to any of the zone to continue. So either way, we'll just keep an eye on it. We know where our preference is bearish on the monthly, and as such we prefer bearish setups. Now let's go on to USD CHF. USD CHF has the same also bias, bearish on the monthly. We have a few zones that we have marked up, and those zones have not been retested, so we are steadily waiting to see if any zone will be retested. So we had a swing here recently that was broken. It was quite impulsive, but then the move itself was impulsive, but it did not follow through. There was no follow through. It just popped right back in, as if it was a mistake. And then what does it do? It just consolidates and then sluggishly moves downwards. So if I were to look for an opportunity to draw a zone here, well, we'd say this would be the highest candle on the edge to the body, and then draw it out in the future. And as you can see from here, there was evidence of some sort of sell pressure, because it actually gapped all the way down here, all the way down here, and then market opened and then it grew. This might have been the weekend, but there wasn't a gap here, so this shows that there was some selling, forcefully, which ultimately led to the break of this zone right here. Now if we were to draw this zone, it would be a very tiny zone, to the body, of the candle, very tiny, you know. In fact, too tiny. It's pretty uncomfortable to use this as a zone. It's like, let's see, how many pips is that? It would be 4 pips. So no, a 4 pip zone to me is just too small to even consider. So as such, I would not really have much faith with this zone. Or what I could do is I could leave it just so that I'm aware that there was definitely some selling that occurred here, but I won't actually use the zone itself as a area for which to look for trade setups. You know, if I were to look for a trade setup, I might extend it, you know, to this candle here, to the gap. So from the edge to the candle where it opens, this is a more valid zone here for me, you know. These are things that you would encounter in price. Your teacher or a mentor can help you out, you know, and give you the roadmap. But when you go to the charts, you will experience scenarios and situations that are quite unique to what you were taught. And that's where you have to use your discretion, your experience, you know, some common sense in order to navigate through those scenarios. So in this situation, using a 4 pip zone would not be wise. But extending the zone down to the low, and then now using this whole area where I know there was selling, massive selling that led to the breakup of the structure and an impulsive move, would be the wiser choice. So this is what I would prefer to do. I would prefer to draw this zone out and then anticipate a return to the zone to look for further shorts. And that's it about my USD JPY. Thank you for the breakdown, and stay tuned for more videos in the near future. Peace.